Okay, so part two of the question then, we need to open up our accounts, we need to open up our land and buildings, we need to open up our cumulative depreciation, we need to open up account for disposal of land, we need to open account for disposal of buildings. We would have touched on them anyway as part of your disposal account question. Two new accounts here, the revaluation reserve. So the revaluation reserve, what happens is you're going to credit the revaluation reserve with the figure for the revaluation in the asset account. So your land and buildings accounts will be debit. You'll credit the revaluation reserve with the increase, and you'll also bring across the cumulative depreciation up to that date. And then the revenue reserve, then anything that we sell, when we sell it off, that increase then is brought across to the revenue reserve. So you'll be crediting your revenue reserve and you'll be debiting your revaluation reserve. So let's have a look and see how we get on with this, and we put in the opening balances for each of the accounts. So we know that on the 1st of January 2016, so opening balances will be on the 1st of January for our assets. That figure is going to come from our account here. So that's going to be the opening balance for our land and buildings. And this figure here is going to be opening balance for our cumulative depreciation. So the next thing then, it says, we're going to look at this, 1st of January 2004, revalue property at 620. So of this, 120 was attributed land. So we've used that already to find out what the buildings value is to get to depreciation. So on the first, this is going to be the first 14, we're going to have a balance brought down at 620. So remember, it's always at the end of the month, so it should be the 31st or the 12th. So we're going to balance this off. So it should be 620 on each side. So it should be a balance figure. And what happens then is that the revaluation figure then is going to be the difference. So equals 620 minus 400. So remember, we're taking these figures here, so that should have been 480,000. So I need to update my account with 480,000. So that's going to be your revaluation reserve. So I'm just going to put revalue in there. And it's going to be the first of 14. And then you will bring down your balance then. So first to the first 15. Balance carry down. It's going to be 620. So because this revaluation is on the debit side in the land and buildings, we're going to go to the credit side in your revaluation reserve. It's going to be first of the first 14. It's going to be land and buildings. And it was 140,000. And then we're going to do the same then for depreciation. So when you revalue something, the depreciation that we have in your depreciation to that date needs to go to revaluation reserve. So it's the first of the first 14. So revalue. It's going to be how much is in the accumulated depreciation. So it's 48,000. So that's how much has been depreciated on our lands to that date, or buildings to that date. So that's going to go into a revaluation reserve as well. So remember, two items that goes in: the revaluation amount and the depreciation amount. So cumulative depreciation and the increase. So it's going to be 48,000. Okay, and then also need to put in depreciation for this year. For the profit and loss. So we will calculate that, which is 10,000. So your balance then is 10,000. Okay, so just balanced off this account and brought down the balance to the next date. So what happened next then? The 1st of the 1st 2015 we purchased. So we'll go in something like this. So the bank that we paid was 130,000. We paid a contractor 50,000, wages then or 250. So all these then are added up. So you get 825,000. So the balance then, 31st of 12/15, balance carried down, it's going to be the same amount, 825,000. And that comes down then to the next year. Next thing you do then is put in the depreciation for this year, for the profit and loss. And that then is going to be for 2015, which is these two added together. So 14,000. 14,000. So you just balance off the account and bring the balance down. We don't need any other accounts because nothing much has happened. Only for, nothing else happened in there, so everything is put in. So 2060 then, so we sold land for 170,000, which would cost us, this is the revalued amount of land. So it was revalued to, so it was 120,000. So we need to reduce our lands by 120. So we would have done before this before our disposal. So in our land and building, on the first 16 disposal, which is going to be 120. So we've credited our land and buildings. Now we have to debit the land and buildings account with the same amount. So the first 16 land and buildings, it's going to be 120. So how much do we get for it? 170. So that's going to be your bank. So the first 16 bank, 170. So the difference is 50,000 on the debit side. So that's a profit. So just balance it off there with the P&L. And then also remember that when we sell something, so we sold 120, we need to put the value that we got, or the revaluation, needs to go into revaluation reserve for that amount. So we look back here, when we revalued, we made 40,000. So that 40,000 then is going to be credited to your revaluation reserve, or debit to revaluation reserve, credit to your revenue reserve. So we go down to a revaluation reserve. So it's going to be the first 16. That's going to be revenue. That's going to be 40,000. So that's need to reduce, need to put it over here to put into reserve because we have that money and we're going to use that money later on in the business. We might give it back to shareholders or something, but it's money that we have because we got rid of the asset. We need to account for it somewhere. So we account for it in the revenue reserve. Okay, you can balance them off if you want, but it's going to take time. And in an exam situation, you're just eating into your time, so you don't have to balance these accounts for each year. Let's just have a look at the question there. So we also have repairs here. So we need to balance off this account first. So 31st of 12/16. So you can balance off the accounts. So the new balance then 705,000 brought down, and then the last one then repairs. So what year are we in again? So 2016. So the first 16 bank repairs was 10,000. So it's going to be 10,000 here, and your balance then 31st of 12/16 balance carried down. It's going to be 10,000. So that'll be used later on when we do up our profit and loss. Okay, so that's what your repairs account is going to look like, bringing your balance of 10,000 down to the next year. Next thing then, revalued buildings owed at 846. Oh, we need to do our depreciation for that year as well. So don't forget to stick in your depreciation for 31st of 12/17, profit and loss. Sorry, 2016. So for 2016, it's 410. So then we just balance them off then. So when you balance it off, this is what true cumulative depreciation account is going to look like. So you got 38,200 brought down to the next year. So in 2017 then, so we revalue the buildings owed at 846,000. So another revaluation. So in here then will be the first 17, your balance, which was 846, I think. It's 846. So there's going to be difference between the two. So that difference is going to be your revaluation figure of 141,000. We look back here at our account, we would have here 141,000 as well. So you need to bring this 141 down to the credit side of the revaluation reserve. So first 17. So you put in 141, and then remember you need to put in the cumulative depreciation that we have in the cumulative depreciation account for the moment. So whatever figure is up there needs to go down here. So we go up to cumulative depreciation. The figure we have is 38,200. So that goes down into the reserve account because we revalued it. So our buildings are now at a different figure. It's 32,000. Then we put in the depreciation down for this year. Which is 169,200, and then we balance it off. Sorry, 16,920, and then we balance it off. Okay, so let's have a look at the last part then. So sold for 225,000, the building purchased and extended in 2015 or 2015. So the cost of that building then, it's this building here, 246. We need to reduce our land and buildings by 246 and take out the depreciation for that amount first. So it's going to look something like this. So we're going to come here. It's going to be the first 18 disposal, and the value of it then is going to be disposed, which is just 246. That needs to go into the disposal account as well. So we have credited our land and buildings. We're going to debit our disposal. Then we need to take the depreciation for that vehicle as well. So cumulative depreciation. So cumulative depreciation for disposal of 246. So see the way we've done the calculation here, 246 into depreciation is 492. So 4,920. And then you're going to put in the bank then as well, the money that we got to find out whether we made a profit or loss on that. Okay, so you would have made a loss on disposal. So we would have the cumulative depreciation 4,920, the bank 225,000. So this is less than the debit side of 246,000. So we take them away from each other. You get a loss of 16,080. And the next thing we have to do is a double entry for the cumulative depreciation. So that's going to be back up into the cumulative depreciation account, which is account here. So the first 17 disposal. Which is 492. Okay, so that's the first part of that question done. And then it says it revalued the remaining parts. So now we have to revalue what is sold of the building. Then we have to do the revaluation reserve for the sale of the building. And we've that done already as part of our working. So we went here, 41,000, which is to revalue 2017. And then 2 years then, depreciation, 4,100 and 4,100. So that's 49,200 going to the revaluation reserve. So you're going to debit the revaluation reserve with that figure, 49,200, and credit your revenue reserve of 49,200 because we sold the asset. The last thing then is to do the revaluation part. So in the question says we revalue to 715,000, so 715,000 in here. On the credit side, so you got 961,000 on the credit side, so the revaluation then is going to be 115,000 on the debit side. So that also needs to go into the revaluation reserve. So down here, you're going to put it in here. Okay, so that's from the land and buildings. Remember, you need to put in the cumulative depreciation as well. So the cumulative depreciation then is a figure that we accumulated for the buildings we got rid of. So the buildings we got rid of then is this 600,000, which is, or 600, which is going to be 12,000. So 12,000 goes into the revaluation reserve, and then you put in this year's depreciation for the profit and loss. So we've calculated, which is 14,300, and then